Literally, if you go on CNN, you want to get news. What's going on around the world today? What are some of the things that I should be aware of as a human being, as someone who's interested in world affairs, U.S. affairs? Literally, 15 of the articles will be about Trump. Now, I'm sorry, but as much as I love America, we're not the world. But 15 articles about the U.S., and every single one will be anti-Trump.
And welcome into crushthestreet.com. I'm Kenneth Amaduri, and we're going to be having a conversation today about the economy, Trump, and the implications of what's going on around that, China, the problems that they're dealing with, and hey, will that spill over to the U.S.? We're going to get Andrew's thoughts on all of these things. His name's Andrew Zatlin, financial commentator, really an expert across the board. He's with Moneyball Economics. And I had a chance to speak with him last week and just chat about current events, the economy. And man, this guy knows his stuff and is super well-versed. And I know you're going to get a lot of value from this interview here. Andrew, thanks for coming on the line with me today.
Hey, thanks for having me, Kenneth. Hello, everyone.
Andrew, I've spoken to guests in the past who are very bullish on China. And I listened to a prior interview of you, and you were talking about China and it being on the verge of its own Lehman Brothers moment. And I want to talk about this just, as we start here. What are we seeing in China, and how important is this to what we might face here in the U.S.?
Wow, that's a big one. So China as a behemoth, is a fascinating thing. And I think it's all about debt. When we say Lehman moment, we're talking debt, too much debt, unpayable debt. But maybe I could take a step back and give some context to why China today and what could happen tomorrow via our relationship with China, how that affects, investors in the U.S. and globally. I like to think of it as kind of a Marshall Plan 2.0 has been underway for about 20, 30 years. I spent about 4 years in Japan back in the 80s. And at the time, it was illegal to go to China unless you were part of this tour. Basically, this was 30 years ago. China was closed off to the rest of the world. I actually had the opportunity when Deng Xiaoping came back in the late 80s. I had the opportunity to visit China while I was in Japan. And China 30 years ago and China today, totally different. And if you think about it in terms of a Marshall Plan, after World War II, we went to Germany, we went to Japan. And essentially, a lot of investment was made in those economies, fresh infrastructure, fresh factories, and they came into the world as both a new market for the U.S. as well as competition for the U.S. And that's healthy. The pie was growing. And so even if the U.S. share of the pie was getting smaller, overall it was a bigger pie. So, that's fine. And that's kind of been where we are. And so China 30 years ago, how does a country like a China emerge within 30 years? And the answer is two things. One, they opened up, they went back to being what they were, which was a center of economic clout. They opened up to the world, but we have the internet. It helped them 20 years ago to suddenly be able to make stuff that the rest of the world wanted because we had the internet that enabled them to see what the rest of the world wanted. We've got this a massive amount of Marshall Plan, and I don't mean just coming externally. A lot of people will look at the offshoring of manufacturing to China as a bad thing, and I certainly think that we could have done a lot better over the past decade or so with our industrial policy in the U.S., but that's part of this whole concept of Marshall Plan. It was an accidental Marshall Plan. We didn't mean to give them all this stuff, but they certainly welcomed it. Along the way, China has done for themselves this massive infrastructure rollout. I mean, just to put it in context, they have built in 20 years, they have built lines of railroad almost as much as the U.S. has done in our entire lifespan. So China has really been on this massive growth cycle. It's been referred to as a super cycle. So that's kind of the background. Is on the one hand, China was nowhere 30 years ago. Now they're here. We enabled that, accidentally or otherwise. But China's now a presence. Remember, in the history of the world for thousands of years, China was always a producing nation. So them making things and selling things to the rest of the world really is a return to where they've always been as one of the major poles in the world. And It's a question now, though, if we talk about things like their Lehman moment, it's a question of where do they go next and how do they get there? And that's where things start to get a little shaky. See,
let me jump right in there, and I want to. That leads right into that. And one of the arguments for people as to why China isn't as bad off, let's say, as the U.S., is that, you know, even though their spending has been very aggressive, it's arguably more productive than the U.S. And they, you know, for instance, the U.S. spends money stationing troops in, you know, whatever, 160, 170 countries, entitlements. And China is building out their infrastructure, just like you said, for the future to grow into, while in many ways the U.S. has spent their money on the past. So any thoughts on that as to the implications and where they're headed?
You know, that's absolutely what we want to talk about, is that piggybacking. And that's what Japan did, and that's what NATO has done, and the EU, is they are piggybacking off of a Pax Americana. Now, we benefit from that too, but let's face it, it's kind of, it's annoying at some level to look out and say, you know, the U.S. is maintaining peace in the Persian Gulf all the way out to Indonesia. You know, it's our maritime fleet. We're spending, I don't know how much money, $1 trillion, put a number down, right? We're putting our ships and our Navy in that area. Why? Well, essentially to secure shipping lanes. Why? To secure oil. You know who gets that oil? China. That oil doesn't come to the U.S. So there's a lot of piggybacking on this, and that's part of why Trump is going out and saying, wait a second, you know, agreements that we made 70 years ago, first of all, it doesn't look like they're being fulfilled. Hey, NATO, where's your 2% minimum spending of GDP going? You're not even fulfilling that. But it's not just that. It's 70 years ago. The world's different. Why don't we revisit some of these agreements? And in looking at Asian economies like South Korea, like Japan, like China, you realize they're piggybacking off of the Pax Americana. To your point, what's interesting is, you know, I'm in California. We've been talking about a high-speed train linking L.A. and San Francisco for a decade. Money's been spent, billions and billions. China does it within 2 or 3 years. Now, that's the advantage of a Marshall Plan situation where you can come in and have totally net new infrastructure. It's the advantage of having an autocratic, tops-down central government where you can just mandate, we're going to do this, and we're going to uproot 1 million people from an area and just flood it because, you know, we need water reservoirs, and that's just what we're going to do. You can do that in a China. You can do certain things and mandate them in a way that are ultimately more productive. So China's cost, for example, at the rail for shipping things on railroad, I read is about half our cost, about somewhere I think it was a third of EU's. You know, whatever the figures are. Bottom line, by having new infrastructure, they're going to be in a better productive position as an economy going forward. But they have a lot of problems. Now, on the one hand, let's start off with China is a large country, but you also have to recognize that the population, if you look at China as a big circle, it's only around the right side of that circle where people live, the bottom and the right. Most of China is really not populated. In fact, most of China is a big, hollow desert. It's very much like Iran. You have this big desert, and on the fringes you have the population. So when you look at China, you need to recognize that it's not as safe and secure. There isn't a lot of water in China. So the ability for China to develop actually has an upper limit. Look at the U.S. We have the Mississippi River running down through our center. We have a lot better resources and distribution of population, and we have a lot more equality. So China is still catching up to us in a lot of ways, not just technologically and productively, but as an area to be settled. And that's where they're focused right now, is all the money's been going to one tribe in China, the big tribe, the Han people. It hasn't really been going to the inner regions, and that's where they're trying to focus their investment. Well, right off the bat, that's going to be unproductive malinvestment. We've heard about the ghost cities of China kind of a thing, where they build an entire city to handle 50 million people, and nobody lives there. Fits and starts, that's where China is. They're growing, they're coming back, and there will be bad investment. But along the way, let me kind of give you my sense. I think the strength of China is a lot less than is perceived. And I say that because, number one, you can't believe the numbers coming out of China. Who says that they've got the world's second largest GDP? Well, the Chinese do. Really? So we take their word for it. We shouldn't. Because as we know now from a lot of anecdotal information, a lot of the economic data is forged. It's faked. And here's why. A couple years ago, the Wall Street Journal featured me in an article because I was able to show how exports from China were really just on paper. They were going to Hong Kong and claiming that they were exporting. A company would say, I just exported $100 million worth of stuff, but I need these lines of credit in dollars. What was going on is the Chinese government was subsidizing trade. They were offering dollars at a discount. So companies said, great, you're going to sell me dollars at 10% off. All I have to do is show that I'm, quote, exporting. Great, well, I'm exporting a lot. Now let me get those dollars at a discount, and then I'll arbitrage. This is great. It's free money. And that's what they were doing. And that was exposed for a while, and all of a sudden, China suddenly admitted, yeah, because what you would do is you'd look at the exports that they were claiming were going around the world, and you could line up what the EU and the US were reporting as imports from China, and there was no alignment.
And that was happening on a large scale?
5 years ago. Oh, massive, massive scale. And it still happens today, but to a little bit less because, hey, that trick was caught, and because also, China doesn't have the reserves now. And we have to take them at face value, take their information at face value, and we shouldn't. So the other thing is, let me go back to my days in Japan. Japan is also an autocratic society, even though they like to position themselves as a democracy. The reality is that Japan is a federation of state governments, but the state governments are led by people who are dispatched from the central government. It's as if the governor of California was basically put in position by a Donald Trump. They are literally run by the central government. Well, so if you want to rise up in power at the state level, you're dependent on what you do that supports the central government. It's very different from the U.S., where the states are very independent acting, and the federal government is a little bit more of the tail than the dog, in the sense of political power. There's more independence. In Japan and China, there is no independence up to a point. And so what you see is, in order to shine, in order to get that money from the central government, you turn around and the central government says, it's very, very Russian in a lot of ways, very Soviet in a lot of ways. Comrade, we need to see our 5-year plan being achieved. You must create 5 million tons of grain. Okay, well, we did 6 million tons of grain. Oh, congratulations. Cheers, everyone. Here's vodka. Same thing's going on in China, right? Is you beat the targets that you've been given, money flows to you, you get enriched. Okay, well, who's to say you beat them? You're the one cooking the books, baby. So you have a progressively large level of book cooking. Now, here's where we get that Lehman moment starting to happen. You've got debt. You have real debt, not fake debt. The debt is real. China's been borrowing from around the world. They're internally doing all this wonderful thing. You've got massive amounts of debt. In fact, if we want to talk about cooked books, the amount of debt that's reported is probably 50% below what it really is. So you have a lot more debt than is really there. But even if we took at face value the level of debt they claim to have, it has to be supported by underlying GDP growth. Well, here I'm saying the underlying level of GDP growth ain't there. It just isn't. It's cooked. It's falsified. But the debt's a lot bigger. So you have this really Wile E. Coyote moment coming where, and again, the yuan, the renminbi, whichever one you want to call it, is not a global currency. Why? Because everyone knows that they're faking things. They're constantly faking things. And so it's not really a currency that anyone really is going to use in their reserves. If anything, it's just we have to because China insists on using it in certain trading environments. Well, so you've got a situation where at some point in time, China has to turn to the outside world to have their debt covered. And the outside world just isn't going to buy it. And then you're going to finally see the curtains being pulled, and you're going to see that the underlying economy is a lot weaker than it is perceived to be. And that's where we're heading. And how does that affect us? Why should we care if China has more debt or less debt or can't pay its debt internally or whatever? And here's why. Let's use a real example of what's been going on over the past year. So China has to buy, I mentioned railroads, they're laying railroad lines. They just announced $1 trillion plan to create even more railroad lines, more roads, more highways. Now, they're doing that for two reasons, because that's the traditional way you project power. That's the traditional way you can move goods. It's a productive thing. I mean, this goes back to Roman days. What do we have left over from the Romans? Roads. This was the way you were able to both move your troops, but also make sure that people are linked and goods can travel. So China, seeing this, is trying to move more highway and more infrastructure development going forward. That means cement. That means iron ore. That means all these things that they've got to import. So that's what as soon as they announce this plan, naturally iron ore just surges. go back to about October, iron ore starts to just surge. China, meanwhile, is stimulating lending so much because their economy is basically dead right now. They're not growing. They're not. We're talking about an economy that was growing 15% a year, now down to 6% a year. And remember, that's fake numbers. So in reality, they're not really growing. So what China has to do is they're now at that Lehman moment where it's a Ponzi scheme. They have to keep flipping real estate. They have to keep doing all these things that are using debt in order to keep the population spending money. And this is exactly where we were in 2007, where, the music's playing, and once the music stops, you have these people who have leveraged themselves to the hilt. They can't afford to pay anything, and they've got this massive mortgage that they're carrying. And they can't. So all of a sudden, they walk away. Well, that's what we're seeing in China. So China has been stimulating their debt basically through last year at 25% a year. The M1 money supply, the loans going out the door, was growing at 25% a year. Nobody does that. We're talking about going from a 10% a year situation just 3 years ago to 25%. They're just throwing money out the door. Well, what is we were just there with QE. What do you hope to accomplish when you just throw money out the door? You hope for asset inflation. Well, that's what we saw. But here's how it affects us out here. Iron ore prices surge. And if you go back to October, you had oil prices surge. You have iron surging. All of a sudden, you've got this massive global inflation hitting. You have this massive rush. It's boom times again as far as everyone's concerned. You have the mining companies. Everyone is suddenly jumping back into the swimming pool, except it's all fake. It was all just basically China saying, at some point in time, we're going to start building railroads. So here's a lot of money. So what happens? People borrow that money, and they start speculating. I don't mean people, I mean Chinese investors and companies. So you get to a place now where there's a lot of speculation, a lot of hot money's running around. China starts importing iron ore prices surge, and then China goes, oh my God, we can't continue to grow our money supply 25%. This is ridiculous. They tap the brakes a little bit, bring it down to 20%. Iron ore prices collapse overnight in January, and they're continuing to go down. Why? Because China's stopped fueling their debt again. So we have a drunk at the wheel, zigging and zagging based on their debt. The China debt is now so huge, it is not payable. It will never be payable. They've gotten to that point. It's a Lehman moment. There's too much debt in China. It's starting to play like the iron ore example I just used. It hits us in a lot of ways because, again, all of a sudden over here, we see iron ore surging. There's this whole, reflation meme that's going around. It's not real. It's just speculators bidding up the price. And as soon as China reels in a little bit, just taps the brakes a little bit on the lending, on the liquidity, boom, instantly iron ore prices collapse all the way back down. So it hits the global trade. It hits the supply chain really hard overnight. It's a drunk at the wheel. And at some point in time, they hit the tree. And it's inevitable. You cannot grow your liquidity as much as they have without it at some point in time stopping, and it's starting to stop. And if you take, for example, if you lag China's lending, the liquidity that they've been doing, and you look at it year over year, and then you look at how it started to roll over in January, and now it's down to 19% year over year, because it's unsustainable. If you lag that a few months, you see iron ore prices, same thing, 1-to-1, and you start to see the rest of the economy. And what's interesting in China is, until last year, when they would hit the gas, when they would press on this liquidity, you wait a year and their GDP would take off. But starting about a year ago, that phenomenon wasn't happening. Again, that's what the QE idea was, is if we make money super cheap, businesses will start to expand again, they'll start to invest, and we'll have that economic, that GDP growth again. In China, the only thing that's growing, thanks to all that liquidity, is home prices. Exactly like what was happening in 2007. And here, it's the basics. It's like people need only so many cars. There's only so much steel that the world can absorb. And so you can throw as much money as you want. You can try and make people buy more cars, but they don't. And so after a while, all you're doing is creating all this hot money. And so you're having house flipping, real estate flipping going on in China. And that's the only thing that's growing. And we have a contagion over here now, not only because of something remote like iron ore prices going up, and that creates inflation, but that fast money comes into our markets, like in Canada and the U.S., into real estate. If you look at the Canadian real estate market, it surged and now it's plunging because Chinese fast money has been ebbing and flowing. what was it? Vancouver passed a law about foreign ownership of housing, where they were taxing it greater.
Mm-hmm.
Boom, houses instantly dropped. It's a whack-a-mole time. Chinese money wants to get out, but it doesn't have a lot of places it can get to legitimately. That's why Bitcoin is going up. Give you a real example. So last year this time, I was helping some Chinese investors look at taking some of their money and investing it in Silicon Valley. It's a great story. Found some really interesting opportunities where there was some great strategic relationships where Silicon Valley companies would have a partner in China, and there was a great win-win. And these were very well-connected Chinese banks and investors, all the way to the top. So everything was going great, and then all of a sudden in September, radio silence, nothing. Turns out they could no longer get their money out of China. Turns out that Chinese investors, thanks to the government, can't get money out. And that wasn't just my experience. You have a lot of companies in China that were operating here trying to invest, and all of a sudden, instead of buying, they're selling. And the issue here is, again, the capriciousness of a Chinese government. And that this is why, for example, the yuan will never be a world currency at the level that it wants to be. Can't trust the government one way or the other. But the Chinese investors were unable to get their money out. And then all of a sudden, Bitcoin starts to take off, because Bitcoin really is a way of smuggling money. And that's why Bitcoin continues to go up, is the Chinese government's trying to play whack-a-mole, trying to keep their capital inside China. And as it leaks out, it has to find ways to leak out. Bitcoin is one way that the money can get out. Let me tie these loose ends together. We've got a China that has massive amounts of debt. And you have a lot of people in China who know this and want to get their money out into an asset that's convertible and liquid, and that's outside the reach of the Chinese government. That's why all the money's coming into the U.S. real estate and stock market. It's not because they believe in the U.S. It's because China kills people who are corrupt. They don't have this problem of taking bankers to court. They will kill them. They will execute them. That's a policy, right? That's a policy. They don't mess around. And people know that money will be taken. If you're caught with money, and you shouldn't have that money, if you're a low-level bureaucrat in some remote village, but you're found with pallets of money and silver and gold bars, you're not going to last long. You're going to be killed, because they do it. They've done it for quite some time in the anti-corruption campaign. So you get your money out. Bitcoin is reflecting that get your money out. Now, China's government is trying to stop that. Now, why would they stop that? It's not because of honor or pride or, how dare you go and take your money and go buy a palace somewhere. It's got nothing to do with it. It's because there is such debt up to their eyeballs. They need the money. They need to stop capital outflow.
Sure. Andrew,
yeah,
no, I totally agree, and I love the image of the whack-a-mole, what they're trying to do. Not that I like to whack moles, but it made a good point as to what they're trying to do to contain everything, and I thought that was really interesting. And you brought up Trump, and there's a lot of things to talk about here with Trump, and we have Trump trying to crack the whip on China. Obviously relating to what we're just talking about, and you brought up NATO and Trump saying, hey, you need to come up to the plate here, step up to the plate and pay your fair share, or at least what you agreed to. And you know what? We also have the situation where the liberal left is trying to impeach him, and just so many things going on relating to Trump. And I'd like to open up the conversation. What are the implications of this? And, where are we with Trump and, the global world economy?
Well, let's use Trump. I'm going to say Trump is not the most articulate man. He's not able to convey what may or may not be on his mind. But I will say a couple things that I like about what Trump is bringing to the table. And I don't mean the Trump negotiation style, which may be to throw, a rock into the middle of the pond and watch the waves and ripple effects and the disruption. I'm going to say that I like that Trump is doing something very critical. He's bringing an industrial policy to the center of the discussion, and he's doing it in several different ways. We're coming out of an 8-year period where we had bureaucrats in charge. The Obama administration was nothing but bureaucrats. We have now a guy coming in who's a business person who surrounded himself with other business people, and they're saying, there's no way around the fact that the U.S. has a more open door trade policy than other countries do. And you have a certain degree of questioning of some of the status quo agreements we have and the degree to which they are fair. I remember when he first raised his hand and said, let's look at NATO. Does this reflect conditions today? And the media and Hillary instantly vilified him. Oh my God, he's throwing NATO. Look what you've done. You've already shown, you've created cracks in the relationship. And I don't look at it that way, and I don't think it was heard that way. And I think that what's happening right now is the European pushback, which happens when you have, one side push the other, you have action, reaction. I think what Trump said was quite valid. We have a 70-year-old agreement. 70 years ago, Germany was on its knees. Everyone in Europe was on its knees, and the U.S. came in with a Marshall Plan to help out, and we created certain agreements. Hey, 70 years have gone by. Germany, you're not on your knees anymore. Okay? And we're starting to see, for example, that the Europeans can't even protect and secure their own borders, without the U.S. Is that what they want to be like, in the next 70 years? And so just simply by raising his hand and asking, is this what things should be, you had this huge pushback. And I think that's what you're going to see in many, many places as he starts to question not the heart and not the meat of what's going on, but the way it's played out. It's okay to revisit something. And anyone who says you shouldn't revisit something is actually dangerous. Mm-hmm. They're victims of either sloppy thinking or they've got an ulterior motive. I have no problem with a Trump coming in and saying, we had NAFTA. It's almost, it's almost 30 years old, 20-something years old. Is it working for us? Is it working for all signatures of that agreement? If not, then let's revisit this agreement. Because that's what it's supposed to be. It's not supposed to be, signed and we'll just have to live with the consequences. So I look at Trump as coming in and at least challenging in a key way. When Angela Merkel this week said, oh my God, you're not our partner. What happened was Trump was supposed to go in and rubber stamp a climate deal. Instead, he comes in and says, I've got a list of priorities, and the climate situation and the 50 to 100 year downstream effect is maybe on my top 10. But can we at least look at the top 2 or 3? Can we look at things like terrorism and industrial policy? Maybe we should prioritize those a little bit more at this juncture. And that freaked out the Germans because obviously I think right now Germany is on one end of the spectrum as to what to do with those two topics and what we want to do with those two topics. And so there's going to be some pushback. And also, when Trump says that's it, you guys are exporting too many cars our way, you're talking about the lifeblood of Germany. He just, basically threw down one of the aces, right? Hey, we can close our market to you in one way, shape, or another. Oh, hey, VW, you were caught already cooking your books with, messing around with the diesel engine. What was it, the diesel engine fuel efficiency or whatever? Come on. I like that Trump is willing to raise his hand and say, no, the status quo isn't working. And I look at it a simple way. I think the Democrats are victims of sloppy thinking. I think the Democrats are essentially a trust fund baby, which feels that they can give away all this money, just flows down, they can give it away, but they don't have to go in and take care of business. So if we talk about the money tree, I think the Democrats act like a trust fund baby that has a money tree, but they don't look at the tree, they don't fertilize it or feed it. This is why the American working class turned their backs on the Democrats and have been for several years, is on the one hand, the Democrats want to give away, but they don't want to do anything about maintaining workers and employee type of circumstances. What they argue for and fight for is not beneficial for workers. And so I think that's what you're starting to see is that the Democrats have actually started to dip into the principle. So the trust fund baby metaphor, they can't give away as much anymore. And so here you have a Trump coming in and saying, you know what, I don't know if we should or shouldn't give away stuff, but we've reached a point where maybe we should give away less and we should focus more on fertilizing the tree, on making sure that we have something to give away. And that bothers the status quo that's been there for 30-something years. You have bureaucrats who were in charge for 8 years, who've seeded all the various departments out there in the federal government and at the state level. Bureaucrats are trust fund babies. They don't have to work for the money. The money's there. If it isn't there, they'll just raise tax revenue. I'm in California. Geez, man, California is just a great example of that, where you've got Jerry Brown saying, we're just going to add $1 to fuel taxes. We're just going to add $1 to the cost of gas. Why? Because I can always tax you if I need to. If I need the money, I'll just raise taxes. And I find that very interesting, because that's the mentality of a bureaucrat. It is that trust fund baby. No matter what, I can get the money somehow. I'm not going to worry about it.
Did you hear Jerry Brown when he called everyone who opposed the gas tax freeloaders?
Freeload.
Oh my God. How could you? What an insult to the American person out there. And I was just blown away by that. But go ahead.
I mean, hey, deplorables. We've heard that term used before to describe people who aren't them, kind of thing. You have bureaucrats in charge, and it's time to not have bureaucrats in charge. You can have bureaucrats in charge. You can have entitlements when you're growing. Let's be honest here, Ken. Our growth has come down dramatically, but our entitlements haven't. You can give away things when you're fat and rich. When you stop being fat and rich, you got to stop, take a step back and say, can we continue to do even more entitlements? For me, Obamacare was jumping the shark. It was saying, we don't have any money now. We're $20 trillion in debt, but let's give away even more. Come on. Oh, wow. Talk about sloppy thinking, you know? And you have a generational problem. Let's face it. A lot of the money that's going out the door in tax revenues is, kind of a pig in a python thing. Like I keep mentioning a lot of metaphors here, but you have a big demography that's aging, that's sucking up a lot of these entitlements, and they say, you know what? We deserve it. For this, that, and the other reason, I deserve Medicaid, Medicare, Social Security, and all these other things. Why? Because damn it, I'm old. That's why, and I deserve it, and I paid some in it, and I'm going to take out even more. And so I have a real problem right now with a real concern, rather, with our economy and where we're going. And I think Trump is coming in and saying, yeah, so do I. I don't like the fact that we've got this runaway train when it comes to giving away stuff. How do we guarantee that we can do that? Oh, we're just going to tax people? You can't do that. You can't continue to tax and raise tax and raise tax and assume that that's going to be possible unless you do the other side of the equation, which is to feed the beast as well. You've got to make sure that business can grow. And that's where the problem, that's where Democrats have failed. That's their sloppy thinking, is they're focused on the giveaways. They're not focused on these other things. And so when Trump comes in and says, I challenge NAFTA to show me that it has been in the Americans' best interest, define America's best interest. Okay, now let's have that conversation. He may be, people don't like his style. People may not like him. People may not even think that he's coming at it from this direction that I'm describing. I personally don't care. I don't know the man. But I like that he's forcing the conversation. And it's incredible to see the response is not a rational response, a logical response. It's always this heartfelt, very, very, very polarizing, think of the babies, all the poor babies. It's this appeal to the emotions, not to the fact that, I am thinking of the babies. I'm thinking of my babies, my kids, who in a generation are going to be forced to have to pay off this stuff. How are we going to do that? If you're going to set things up for failure, let's stop and let's set it up for success. And I think I like a Trump coming in and saying, unfortunately the guy's not very articulate, so he can't really describe his master plan if he has one. But, that whole sense of what is in the best interest of the American worker plays out in many ways of his side policies. Like, let's use the H-1B visa. Can we talk about that for a second?
Sure. Yeah. Let's do that for a minute. I want to ask you a follow-up question though, but go ahead.
Okay, so H-1B visa, this was another one of these, oh my God, you hate immigrant moments. That's not the case. H-1B visas were set up as saying, look, we don't have a skill set in the U.S. We need that skill set for the good of the economy. That was the idea, the premise. It turns out that the bulk of H-1B visas go to Indian software coders, the bulk of whom are being used by a handful of companies, the Cisco, Apple type of companies, and Google, Facebook. This is cheap labor. That's all it is. It's just cheap labor. That's all they're trying to do. And so Trump comes in and says, you guys are basically helping India, millions of jobs of software programmers in India. Maybe we could talk about you doing that here. And there's a reason why this H-1B visa thing, initially was, oh my God, Trump hates immigrants, and then died a little bit later as a cause célèbre. It's because you can point to it and say, this is just basically subsidizing Facebook, Google, and Apple. This is a way to save them tens of millions, if not hundreds of millions of dollars. It's a boondoggle. And so It hurts the U.S. And so I look at Trump's policies as he's trying to bolster the U.S. economy. He just can't communicate it very well. And he's distracted by the nonsense of the Democrats.
Well, it really just seemed like the Democrats created this fictitious character of a racist Trump. And they're doing everything they can to impeach him, discredit him. And I want to get your thoughts on whether or not you think that they will be successful in impeaching him and fully controlling the narrative enough to actually undermine Trump, and what this could do for the economy. Is it a disruptor for the stock market, disruptor for confidence in the U.S. economy, and even a disruptor for the dollar? Will other countries lose faith in the dollar that is essentially holding the house of cards together at this point?
All right, so let's talk about this. If I go on CNN right now, CNN's website, the top 20 articles, I'm going to guess because I looked at it yesterday, 15 will be anti-Trump. And I mean, this is a new, so let's talk about how the media and the Democrats have joined together in an anti-Trump effort. Literally, if you go on CNN, you want to get news. What's going on around the world today? What are some of the things that I should be aware of as a human being, as someone who's interested in world affairs, U.S. affairs? Literally, 15 of the articles will be about Trump. Now, I'm sorry, but as much as I love America, we're not the world. But 15 articles about the U.S., and every single one will be anti-Trump. And it's like basically talking about, gee, the poor guy wore brown shoes with a blue suit. What was he thinking? That kind of stuff. The Huffington Post is probably the most shrill place to go if you want to read anti-Trump stuff. It's going to be, gee, what did he watch last night on Netflix? Are you kidding me? Doesn't matter what the guy watches, it's going to be negative, right? And I think what's happening is it dangerous? No, it's foolish. The media has kicked off a war with Trump, and he's, as usual, not smart enough to ignore it because he loves a fight. The guy loves a fight. You can tell. He's a fighter. He's getting poked at. He's the monkey in the cage getting poked at by the media, but he's going to win this one because at the end of the day, people don't care. They care about what's happening in their wallet. And when the Democrats are focused on non-issues like Russia, it's a non-issue. Look, the guy doesn't collude. He didn't. He may have been a little naive here, there. There's no collusion. And they keep going after this and going after this. Instead, you've got real issues. And I think it was over the weekend, I don't recall her name, but she's involved in the Beltway politics. But she said she's been going around the country, going to these events at the local level where the senators and representatives are checking with their constituents. Russia is not an issue. Jobs and healthcare are an issue. So yet again, the Democrats have distanced themselves from core issues that bother the public. At the same time, the Republican machinery, political machinery, is much savvier. They've done a better job at the local level. So you have, on the one hand, the competition. The Republicans are better at now at the local level of controlling the politics. Then you've got the Democrats shooting themselves in the foot by focusing in on things that don't matter. They've overplayed their hand. I think, in fact, if you start to really look at the Russia ties, you'll find worse things happen with Hillary than with, potential things happening with a Trump versus actual things like Hillary Clinton agreeing to give Russia 20% of our uranium deposits. And then all of a sudden money showing up in the Clinton bank accounts. The Clinton, whatever the foundation bank accounts are. Bottom line, the Democrats are overplaying their hand. They got nothing. And so what do you do when you have nothing? They're very clever. You try to create confusion, chaos, and distraction. If you can't beat them at that game, you beat them at this game. And it's very effective because Trump doesn't know how not to fight. He doesn't know how to ignore all this stuff and focus on other things. What Trump did initially, when he first came in January, was brilliant. His approach, his strategy was overwhelm the Democrats. Every day it seemed he was pushing an initiative. Now, some people thought he was getting overstretched. I thought it was brilliant because it forced the Democrats to spread their resources too thin. But then all of a sudden we get this Russia thing and he's distracted again. And he's distracted by a couple of other things. I think a smart chief of staff would reel him in and maybe reinvigorate his efforts and say, what do we really want to accomplish? How are we going to do it? Let's overwhelm the Democrats our way, not with this sniping nonsense stuff about Russia. Let's go at them at hardcore core stuff so that when push comes to shove, they've got to turn to their constituents and say, what did I vote on when the time came to vote? Not, gee, 500 some odd people in Capitol Hill wondering, did Jared Kushner actually pick up the phone when the ambassador from Russia called? The stuff that doesn't really matter. I read an article the other day that said it was treasonous. Why do we? Come on, guys. I feel like I feel like the Democrats are just lost. They don't really have a real strategy. This strategy was effective for a couple of months. Now the American public is saying, that's great, we enjoyed the fireworks, but let's get back to business. And the Democrats are not getting back to business. Trump created some distraction by going overseas recently. Now he's back. We'll start to see the payout there. From a business standpoint, none of this is good. None of this is good because it's distracting. And I think the problem now is we're looking at June. We do not have a real tax plan yet. We do not have, none of this Trumpflationary rhetoric has transformed into actual, there's no traction. And so businesses, you got to think of the seasonality of a business. Companies come back in January from New Year's vacations. They start to, look around them. By February, they're getting a sense, their field salespeople, what the opportunities are going to look like. What does 2017 look like? So by March, a certain amount of investment is going to take place. The weather's nice. People are out and about. Companies are ready to hire, ready to spend, expand, do whatever they need to do, the investments they need to make to be successful. But there's a window. That window goes from March pretty much into August. By the time you get to September, companies are no longer looking to hire. They're no longer looking to invest. They're kind of winding down for the year. Well, the problem is we're now bumping up into that window. It's June. Companies had to make a decision last month about how they were going to invest. So when Trump lost the ACA repeal in March, and there was no follow-through with any kind of tax plan in April, businesses pretty much said, that's it, let's ignore Trump for the rest of the year. The sentiment's positive. We like what Trump is saying, less taxes, more freedom to operate, but we're not seeing anything yet. And so that means 2017 won't be affected by Trump. So you have had this lowering of growth expectations. That's now going to trickle in starting in May into their investment strategies. Again, they've been holding back. They're holding back. April, they come in, they're going to do some spending. May, they're going to do some spending. But in general, for this year, they're not really expecting that much economic growth. And they're going to basically position themselves, and we're talking companies, the private sector, position themselves for mild growth, maybe 2.5% GDP. 2018 could be totally different. Trump could be operating on all, cylinders. But that's 2018. That's too far away. And again, we have to wait till January. We have a Democratic Party that has shown that they can effectively distract the president. They can effectively, they can push his agenda off to the side. Here's a guy who was elected with a mandate to repeal Obamacare. Now, that mandate, you could argue, was there or not. Doesn't matter. He had control of Capitol Hill. And he could not repeal the thing that he was elected to repeal. Sharks smell blood in the water, and that's what the Democrats did. So that's why the Democrats started picking up this next thing. Let's go after Bannon. So for a while in March and April, Bannon was an anti-Semitic, cruel master, all these things that were being thrown out that were clearly not true. But, you try to paint, you try to go after members of the Trump administration. You can't go after his policies yet. You go after members of his administration and try to pick them off. Kushner's now the one they're trying to pick off. It was Bannon that failed. You had a bunch of people who represent the Jewish community come out and say, this guy's not anti-Semitic. What are you talking about? Boom. So Bannon was no longer the devil. Remember Saturday Night Live had Bannon dressed as the Grim Reaper.
Grim Reaper, right?
Bannon is evil. Bannon's evil. Well, that lasted for a while, and all of a sudden it kind of petered out. So now we got Kushner. Kushner's the bad guy. What you have is you have a strategy of try to pick these guys off. Unfortunately, the media is playing a role in this. They're buying into it too much. They're drinking the Kool-Aid that the Democratic Party's throwing out there. And I think at a certain point in time, and we're pretty much there, the ship will right size. I think Trump is starting to realize what he's really up against. And I think he's going to get a better team. Let's face it, some of his team hasn't been the right team. I don't think his chief of staff is really doing him good in terms of setting the agenda. The guy's too easily distracted. I swear to God, he's like my kid, an ADHD kind of kid who's just, whatever it is, he's going to jump to. Someone needs to rein him in a little bit. and get him a lot more focused because he has that mandate. So you have an economy where he's screwed up. The Democrats successfully sidelined his agenda because it's already June. He wasn't really able to get anything in there. By losing the ACA repeal, the Democrats showed that he can be sidelined. And so now everything and anything is fair game. I find that fascinating that happened because, again, it's a disappointment. When you look at the Republicans, for 8 years, they sat there, not quite 8 years, they sat there and rallied against Obamacare. And here, when they had their chance, you realize they were full of hot air too. 8 years, you guys had a chance to come up with a different plan. And you didn't. When push came to shove, you had nothing. Okay, Trump gets elected. Okay, you got 6 months to come up with something. You still have nothing. This is, I think Trump is coming in and really exposing both Republican and Democrat parties, as basically your generic politicians who really talk the talk but don't walk the walk.
Yeah, that's a good point right there. He's exposing both sides, especially with how fractured the Republican Party is, and that's a shame that he is so unable to really go in and do some unwinding of this government beast, and it's been very difficult for him, which lends itself to the possibility, even whether or not it's really going to happen, but of Trump's impeachment. So we have a situation here. I want to change topics a little bit. We're getting on the 45-minute mark here, but I want to get your thoughts on the U.S. economy. The situation right now is the stock market has been on this bullish trajectory now for 8 years, so 8 going on, 8 years, and without a massive correction. And this is easing the fear as time goes on of gold investors. People aren't as optimistic about gold because they're more optimistic about the economy because of the continuous growth of the stock market. And as we go on without a major disruption, 2008 becomes a more distant memory. And I want to get your thoughts on that. Where we are right now economically, despite Republican, Democrat, and a Trump implication, what are your thoughts right now on the stock market and these current valuations?
I think you're going to have let's set the background. The Fed has spent $20 trillion propping up the stock market. They're not about to back down any day soon, right? They're not going to do that. We know that the economy is still moving forward, but let's be honest, it's moving forward because we're borrowing money to move it forward. This is not a natural economy. If this was a natural economy, why do we still have interest rates so darn low, and why is it still so precarious? The only reason this economy is moving forward, and the only reason the stock market's moving forward, is because we borrowed trillions of dollars, and we still borrow trillions of dollars.
Right.
Okay. With that in mind, what's the stock market up to? It's up to whatever the Fed wants it to be up to. And the Fed is talking right now, raising their hand, saying, wow, we're back to a little irrational exuberance. So when the Fed even says, gee, asset prices might be a little frothy, what they're really saying is, oh my God, things are out of control again. What are we going to do? Right? Yeah, that's Fed speak for, it's out of control again. And we know it is. You look at house flipping is back. You look at leveraging is back. But I look at more basic stuff. Look at the fundamental economy. We're back to bad behavior and unnatural acts. It is 2006-07 again in terms of debt. Now, people will throw a lot of data points out there. Oh, debt's not that bad. The servicing of the debt isn't bad. I mean, it's less than it ever has been in terms of household income. So it's not quite that, oh my God, if the music stops, everything falls apart. But I look at debt as a barometer of economic health. And we're starting to see the unnatural acts that we saw. When growth really stops, when economic growth stops, people don't want it to stop. And so you start to see efforts to extend that growth. And that's what you're seeing, for example, in the auto market. We're at peak autos, 17 million. We're at peak autos. But by God, if you're a salesperson, you got to sell cars, man. You're not going to sit back and just say, well, that's it. I guess I won't make my number for the month. You've got people to feed at home. So what we're seeing is, again, subprime lending is ridiculous. We're seeing people who shouldn't be allowed to buy homes or cars buying homes and cars. We're seeing FICO scores being fudged. We're seeing all that stuff. And naturally, we're also seeing the default rate zoom. And we know it's going to get even worse because now we've got, in the auto industry especially, we've got residual values of leased cars falling. It's, again, another one of these situations where organic growth wasn't there, and so people with a vested interest had to find growth elsewhere, so they started doing the unnatural acts of approving loans that shouldn't have been approved. It's the same thing when you look at student loans. Student lending went from $200 billion a year just a few years ago to $1 trillion a year. And in case you didn't know this, that's not money going to universities. Okay, during the course of the past few years, it's not that universities suddenly needed a lot more money for kids going to college. What happens is a student loan is a check written by the government to a student, because a student says, I'm in school. And the government says, well, damn, here, have $50,000. Good for you. But that $50,000 is gone to vacations and cars and other things. The student still has to pay off the debt, but that money didn't go to universities. It went into the economy, and that money is now slowing down. We don't really have growth. There's no way to legitimately shove $1 trillion into the economy now. There's no place to absorb it. So what we have is, if you look at the stock market, it's really only a handful of stocks that are growing. Okay? It's the FANGs. It's the Facebooks. It's the Apples. Now, why is that? Here's a little secret. The Fed needs to shove money into the stock market to keep it going. They do it in different ways. They buy VIX. They do other things. Norway, which has their oil money coming in, the sovereign bank needs to invest its money. Singapore, Saudi Arabia, all these countries, all these central banks around the world, sovereign banks around the world, need to shove their money somewhere. And you're talking tens of billions of dollars. There are only a handful of stocks where any hedge fund or any sovereign bank can shove their money and it not be seen. And those are the FANGs. That's why the FANGs are going up. Apple stopped growing. The number of people buying phones for Apple plateaued. It actually shrank. Apple's no longer growing, but their stock keeps going up. Who is buying a company that's no longer growing? Why isn't Apple stock falling and instead rising? Have they released a new product? No. The iWatch was a dud. They have nothing but cell phones, and cell phone sales have stopped growing. They actually shrank. That's when you adjust for that one extra day that they got this year. Bottom line, if you look at the stock market, you've got a couple things going on. Don't look at the stock market. Look at the stock market ex FANGs. And what you'll see is that, in fact, the growth really isn't there. It's actually closer to the underlying economic growth. And that's a good thing. That's a good thing because it means that the stock market is smart. They're not buying into all the ridiculousness. They are saying to companies like retailers, if you're not growing, then we're not going to buy your stock. Why would we own stock in a company that's shrinking? So all of a sudden you've got the Macy's and the Sears of the world collapsing. We have a smart stock market, but you got to be careful because at some point in time, one of the reasons why Apple did shrink last year, their stock price kind of stumbled, because oil prices went down. Oil prices went down. Norway and Saudi Arabian sovereign banks couldn't shove their money anywhere. They didn't have money to shove. Saudi Arabia was actually having to spend money to survive. They had to spend their reserves just to stay up, so they were cashing out of the stock markets and the bond markets. So when we talk as investors, we have an artificial stock market. On one level, for the non-FANG stocks, it is sort of responding to the economy. But understand that the economy itself is growing because of the Fed just basically throwing money out the door, a lot of debt. And that will continue. You don't put 20-something trillion dollars down and say, oh, well, we're not going to put down another couple trillion. The Fed is going to keep that happen. And remember, the Fed's mission is not what the stated mission is. The Fed's mission is to protect the banks. And for a while there, that meant protect real estate, right? Let's get the interest rates as low as they can go so that the capital can grow again in the real estate market. They've done that. Now they're going around to companies, to banks that own a lot of those mortgages, like Wells Fargo. The Fed has gone to Wells Fargo and other banks and said, we want you out of mortgages. Why? Because they no longer need to support that environment. And when they stop that support of mortgages, Wells Fargo is very much exposed, and they don't want Wells Fargo exposed because, again, it's a systematic problem. The Fed wants to inflate the stock market also because, let's face it, there's a certain bread and circuses situation going on. You have to distract the population, get the stock market up, Now, since the 90s, most people depend on their 401ks, which is the stock market. That's the second place where the Fed is focused. Keep the banks going, which was real estate. And the second is keep the stock market going, which is your population. Remember, when Bernanke took over, there was almost a run on the banks. For the first time ever, money market funds went below $1 par. And there was a huge crisis. The Fed attacked it. The people literally were starting to line up and doing bank runs. Keep the stock market up, you're happy. Well, this costs trillions of dollars. This is a very challenging thing to do. Does it continue? Can you keep spinning these plates? I think you can. I think the Fed is trying to maybe reduce the number of plates they're spinning a little bit. They're doing a good job of telegraphing that over the next 20 years, perhaps, they'll stop this little gamesmanship and reduce the lending that they've been doing. But it's not an overnight thing. I think anyone who looks at the U.S. stock market needs to recognize that it's overly inflated. And I think we've heard the phrase BTFD, buy the frickin' dip. Mm-hmm. And that's because we know that the Fed is, on a bad day, is going to come in and throw $1 trillion at the problem. And so will other central banks. Because not only do they have their money vested in the U.S., but they know that as long as the U.S. is dancing, the world economy is moving forward. When the U.S. is not dancing, when the U.S. consumer is not spending, when your 401k seizes up and you're no longer taking money out to build a swimming pool in your backyard because of you feel like the rates are right, the global economy will seize. No one's going to buy Chinese debt when the global economy seizes because, how does China service it? Nobody believes really in the China economy at the level it is. There is a core China economy. It's just not as big as the frothiness presents.
Andrew, I love what you were saying there about the FANGs, and you basically pointed out that the U.S. stock market isn't growing if you take out the outliers. And that's an interesting point, and in that the real consumer of stocks, the real investor, is concerned with a lot of the earnings of these underlying companies. And that kind of leads me to my next question here. That leads me to my next question here, and that is bad money pushing out good money. And that's basically the simplified definition of Gresham's law. And well, many people are interested in gold, and they're worried about the future of the U.S. economy, the global economy, and hey, they're looking for something that they can put their trust into, believe in, and kind of not worry about. Right now they're worried about the U.S. dollar, they're worried about the stock market, but gold has a history of retaining its value, and people are even looking at Bitcoin. You mentioned China and the problems that they had there and why people went into Bitcoin. So, hey, let's get your thoughts here on gold and the current environment that may or may not benefit gold.
So let's go down the path of assuming that we are somewhere in the last leg of the cycle. 8 years in, almost 9 years in, it doesn't go forever, right? So what happens when it does turn down? They're going to throw money at the problem again. That's good for gold. But in general, these are questions that look back at what's the dollar doing. I mean, lately, remember, gold is up more recently, mostly because the dollar got soft against the euro. We've done a complete full circle where before Trump was elected, it was the dollar was at about 112 euro, went down. Now it's back to 112 euro. So gold, for the most part, has moved a little bit. I like silver a little bit better because, again, you get that ratio, that gold-silver ratio. Right now it favors silver. Silver looks underbought. I think silver could move up a little bit more. Then you wait for that relationship and you trade your silver for gold. In general, the macro economy of the world has gotten to an extreme point of too much debt. And the underlying economy isn't going to support that. So the merry-go-round stops at some point. Is gold the place to go? It has traditionally been the fear trade, right? Right now, there's no fear. You've got a little bit of stuff happening again in Europe. You've got Grexit. Are the Greeks going to pay or not? They'll pay. Eventually, a deal gets worked out. You might have some short-term stuff. You don't yet have that sheer fear and panic going on that would drive gold up more. I think gold is more trading right now on a little bit of that dollar move more than anything else. At a certain point in time, I think as we get towards the end of the year, I think the global economy stumbles. I think the U.S. economy stumbles. I mean, it slows down significantly where it's noticeable. And I think what happens is the dollar gets a little bit stronger. So it's not as good for gold. Right? The dollar gets a little bit stronger, not because the U.S. economy is great per se, but it'll be the cleanest shirt kind of a thing where we've talked.
A little counterintuitive almost.
Yeah, I mean, but basically, we do have one of the most productive economies out there. And when push comes to shove, people would rather buy dollars than not. And when the economies are starting to fade, the U.S. will still be in a better position than most economies. So I think you'll see, again, gold, I think going into the second half, probably not as exciting. I think because of a stronger dollar, that's all. But over time, it's a question of when is the next recession? When the next recession happens, people will panic. There will be a lot of fear of the stock market, and a recession goes down. Gold will probably go up, partly because of the fear trade, and partly because, again, the Fed's just going to do a QE move again, QE 520, who knows when it ends. But you don't throw $20-something trillion at a problem and stop just because of another trillion. They're committed to it. Will it work? Probably not. So I actually think, going back to what I said about the stock market, I actually think there's success in the stock market. We were up 20% last week because we are able to pick companies. So what I do is I'm a bottoms-up guy. I look at a company's operational expenditures, and I've been able to hone in on a couple of factors, and I can tell when a company expects to meet their number and when they don't. And so what we do is we recognize that, hey, strip out the fangs. Like we said, the stock market isn't really performing because, again, the underlying economy isn't performing. So you can now say that the market is rational. And if the market's rational, then you look for the companies that are growing, that are stepping on the gas, and you look for the companies that are stepping on the brakes, because the market will respond accordingly. And that's what we've been doing at Moneyball Economics and doing pretty well. Because, again, I think you can accept the rationality of the market, even though there's this underlying shove money at the problem effort by the Fed. And even though that does have a rising tide, raises all boats type of effect, we're now at that point where you can't deny that the economics, the fundamentals, don't support uniform up and to the right type of stock pricing. And the market's responding rationally and accordingly. Last month, so for example, Signet Jewelers was one of mine last week. This is a very important company to look at, by the way, because Signet Jewelers owns things like Jared's, Kay's, all these mall jewelry stores. Diamond prices have been collapsing for the past 2 years because nobody's buying diamonds. They keep dropping the price and nobody's buying diamonds. Signet rings comes out, boom. Tiffany's, everybody's saying, wow, nobody's really buying diamonds. Signet rings is down, I think, almost 20% in 2 weeks, 15, 20%, something like that. These are mall shoppers. These are consumers going out and saying, I'm no longer buying luxury. And luxury is the beginning of everything. It's the canary in the coal mine. When people stop buying an unnecessary thing, that's when you want to sit up and take notice. That's where we are with retailers. That's where we are with restaurants. The consumer isn't getting a lot more money in their pocketbook. We hear a lot in the press about a tight labor market. There's no tight labor market. It's how they measure things that's funky. The reality is there isn't a lot of wage growth. The Fed has inflated things. We have a real estate situation now where a lot of companies have to close up because the real estate costs have just gotten out of hand, again, thanks to the Fed making real estate so attractive. We're in a place right now where Signet Jewelers is saying, my customers, everyday middle income, lower income people aren't buying anything. We're seeing sales go down 10% year over year. They're just not buying anything. They're having to pare back. So we focus on things like that and keep that in the background. That's sort of the 30,000 foot view. There really isn't a lot of growth out there. There really isn't a lot of money rolling around in terms of growth. It's not that people are pulling back per se yet, but they're starting to. And so as an investor, if you're looking for that panic moment, if you're looking for that opportunity to buy gold, accumulate it now. I happen to think that maybe wait a couple months just because I think the dollar is going to get stronger again, and that's going to gold going from 1260 down to 1240 or 1230 if you're worried about stuff like that. Is gold going to go to 2000? It really depends on how big a black swan moment we have with China. I think China really is the big spoiler. And gold and the other, I think the stock market equivalent of gold right now is the military defense type of stock. We now have 3 arms races going on around the world. Trump is now going to NATO and saying you should buy more defense equipment. Lockheed, Northrop Grumman, all those guys are sitting there just smiling, loving every minute of this. $100 billion sales to Saudi Arabia. Wow. How can you not own stocks where suddenly the market has surged $100 billion? How can you not be in that marketplace? Forget Facebook and whether Snapchat's successful or Instagram is successful. Come on, that's nothing. That's fluff. Go where the real stuff is happening, because at some point in time, the stock market will reward that.
Sure. Andrew Zatlin, Moneyball Economics. Andrew, if people want to learn more about what you do, obviously you research a lot. You have a lot to offer people. Please let them know where they can go and what they'll find.
Come to moneyballeconomics.com, and there's a free weekly. And if you would like to see what we're in, the investment ideas that we have, follow that to the Moneyball Trader, and come along and join the ride.
All right. Well, hey, Andrew, I appreciate your time. I appreciate you coming on the show and sharing your knowledge with us. Thank you so much.
Thank you very much for having me, Kenneth. And happy investing, everyone.